You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means, yes, we are back after our unscheduled hiatus. On Friday, we are back once again to commence our broadcast week here on the Options Insider Radio Network. Time to kick things off once again with the Option Block. My name, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting network upon which so many of you binge these days. I want to apologize to everybody who's looking forward to volatility views and for all you pro folks who are looking forward to a little bit of oddities on Friday. If you listened to the network last week, you know I wasn't exactly feeling up to snuff. In fact, I think I even said on this show or on Twifo last week, I had to power through, though. That's how much I like you folks. That was rough getting through 2 hours of talking on Thursday when I felt like doing anything but. But after pretty much immediately after that, went out and got checked out. And I felt better on Friday, getting ready for vol views, thinking, okay, here we go. Maybe I overreacted a little bit. I feel much better. And then the test results come back, and they're like, no, you're not doing any shows today. You're going to go get checked out some more. So I spent the rest of my day doing that, which, as you might imagine, I would have much rather have been speaking to you folks out there. But the moral of the story, I'm back on the airwaves for you folks here on Monday, and still getting everything sorted out behind the scenes. Should have most of our schedule for you. In fact, should have a heavy schedule. My producers don't give an F. They're working me to the bone again this week. So look forward to a whole bunch of content. In fact, I think you're getting 2 pro Q&As this week, so that should be fun, as well as everything else. So yeah, a bit of a hiccup on Friday, but back powering through today here on the network. So you stuck with me, unfortunately, on the show today. No guest hosts or anything, for those of you who were looking forward to that. But we are joined by my usual compatriots, my usual partners in crime. No guest that 80s wrestler today. Obviously, we've been a little bit busy, a little bit distracted with other things, so no time to prep a wrestler segment out here this week. I figure you folks will forgive me. And for those handful of you out there who loathe that segment, there you go. It's your weekly reprieve. Enjoy it, as we are joined once again by, first off, from the Southern Volatility Mecca, Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show, sir.
Hey, good to be here. I'm excited. I'm glad you're doing well. I was worried about you when I heard about everything that happened last week.
Yeah, I was not. I was worried about me too.
In good health. Jeez, what a scare.
Yeah, it's a good time. Go directly to the emergency room. Do not pass go. Do not collect $200. That sort of thing, which is always fun. And then also joining us from Parts Unknown, a.k.a. St. Charles, Illinois, the uncleist of Mike's, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, to you as well, sir.
Always happy to be here, and glad you're doing better, Mark.
Yeah, I can actually maybe talk a little bit today as opposed to Thursday when I said you guys just talk the whole show, because I can't do much. We'll see what I can muster today, because it is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All I know is no one can ever question our commitment to the listeners here on the network again, come hell or high water, unless other dire measures rip me from the microphone, which they conspired to do on Friday. We will be here delivering your content that you have come to know and love for now over 15 years. Crazy. Well over 1,100 episodes of the Option Block, which is crazy town. You know what else is not really crazy town? We call it gentle anxiety town. It's the markets today. Coming into showtime, we were looking green. Things looked like maybe we were looking a little bit better out there. The last few sessions have certainly been in rally ho mode. We are still north of 3,900 as we're kicking off the show here today, but we have been rallying quite a bit off the lows, got well below 3,700 down there. So a nice little bounce there from the lows. What did you guys think about this? Are you buying in? We'll get to your results a little bit later for our question of the week. But today, right now, coming into showtime, S&P off now. It was up about 0.25%. Now it's off about 0.15%. The NASDAQ off about exactly 0.5%. And the Dow slightly unched to down about 0.05%. Not a heck of a lot going on there. That means our vol friends coming in after the weekend are pretty much down from where they were on Thursday's show. VIX cash was at a little bit north of 27.5, about 27.60 when we kicked off the show. That puts it down almost 2 points, about 1.9 points from where it was on Thursday's show. VVIX, man, that triple digits level was pretty short-lived. 89.5, down another 10 points from Thursday's show. So the vol, they are coming for it. VXX 2280. Down about 0.8 of a point from Thursday. UVXY down a full point, down to about 14 when we kicked off the show. SVIX, so our inverse friend there, 1075, up about 0.5 point from Thursday's levels. And UVIX, our levered friend, at about a 16 when we commenced operations. That's down 2 points from last shows. And VolQ, the vol of the NASDAQ, 3130, is down about 2 points exactly as well from where we were on Thursday's show. Let's go around the horn the way we came. Let's start in the land of Austin when they're not eating all sorts of barbecue and hooking those horns. They are, of course, talking about volatility. Mr. Meatball, sir, what is lighting up your tape in the markets this week?
Yeah, this morning or so far today, opened down, tried to rally. Now we're down a little bit. It'll be interesting to see where we are. Vol getting kind of smoked. We're heading into that end of the year kind of malaise, or end of the quarter kind of malaise, end of the July 4th period. I'm really kind of interested to see whether, they push things below 3,900 or whether they kind of get a little bit of a buy into the close. Oil having a big rally today. The oil names really holding everything up. And we got some strength in the Russell 2000 as we head into rebalance this week, which I think is going to be something to keep an eye on.
Yeah, all the fun. Of course, we just coming off the heels of recon out there in the Russell 2000. In fact, I do believe today is our first trading day with the newly reconstituted Russell 2000. If you want to know what that means, what impacts, there's some interesting trends every year that comes out of that reshuffling and rebalancing that goes on over there at FTSE Russell. We did a whole show about that, not last TWIFO, but the episode before with the folks at FTSE Russell. Broke it all down, all the changes, the trends, the baselines, the breakaways, all that good stuff. So check out that if you're intrigued about what the recon is and what that really means for the market going forward, which I think is a more salient point. Let's go out to the land of the uncleist of Mikes as well. Mr. Uncle Mike TOSAW, sir, what is lighting up your tape out there today?
Well, not a lot of things lighting up the tape today, just a lot more just from last week, just with the craziness with which we've had over the last couple of weeks. And that if we go to a time of not long ago, of 3 weeks ago, when the S&P was at 4,100 or in the mid 41s, then we go down to the low 3,600s was the low of this last sell-off on the 17th, and then now we're at the 3,900 level again. There's definitely been a lot of things happening in this marketplace. So I think that with where we are today, the market's just kind of taking a breath, just saying, I don't want to move that much today. I've been giving you guys enough excitement lately. I'm taking the day off, and that's just what I'm doing because I'm the market and I'm always right. That's kind of what it feels like. S&P is down 2.5 points on the day. Not a lot of movement, as we had said. Bonds are giving back a little bit of their rally from last week on the 10-year note, so we've got a little bit of a sell-off going there. Nothing too major. We have that. Silver is flat on the day. And so I think just with where we are right now, we're just literally taking a breath because these last few weeks have just been, whether you're a bull or a bear, you've had some type of stress in your life. And it's just kind of where we are at this stage. So I don't think the market's ready to show its hand today. Do I think it will in the near future? Possibly. We are heading into the 4th of July weekend. So people may have already gone to the lake where most of the big money goes. People might already be in the Hamptons by now. But for the time being, just kind of holding steady and waiting for the market to show something. But as of right now, nothing has been shown.
All right, Uncle Mike, you're a resident permabull. You know I have to ask. We were just obviously a lot lower. We have now rallied to around the 3,900 level. You're a resident permabull. You tend to be bullish more often than not out there. Would you say you're comfortable at these levels right now? If a client calls you up and says, hey, Uncle Mike, I'm sitting here long S&P, boatload of S&P at 3,900. Are you comfortable at these levels? I mean, obviously long-term, yeah. But, I mean, for the next, let's say, 6 months or so, do you think there's a heck of a lot more turbulence and they should buckle in for a lot more downside to come?
Well, I mean, because we're negative on the year, I'm highly uncomfortable at these levels. I think that if the market's not at least going to be positive on the year, then the market really is kind of a weak market, in my opinion. And I'll wait for it to be positive. Of course, like as you mentioned, long term, yes, I'm extremely comfortable with that. But for the time being, I think that you need to really pick your spots to be in a market like this. And I think longer term, short put spreads are things to do, maybe buying some out of the money calls or call spreads with smaller amounts of cash. Those are the strategies with which I'm doing and what I'm trying to stick to, just because of the fact that, let's be honest, we've had a lot of movement in the last couple of weeks. And in markets like that, if you're really trying to do a lot of your base core strategies and you are a permabull like me, it typically won't end well.
Indeed. I was saying earlier, listeners, about the 15-plus year history of the network. I got one of the listeners, Age, in the chat saying, I remember when the iPod days with the early days of Options Insider Radio. Wow, you go back that far. Well, I tip my hat to you. You were the one guy listening back then. Yeah, we predate the iPhone. In the early days, you kind of had an RSS reader together. You had to jump through some hoops on the old iPod to get it. You had to sync with Wi-Fi. Actually, I think you had to plug in. You had to physically plug in the device back then. There was no Wi-Fi syncing. So yeah, we were early days on this whole podcast thing. Man, it seems like an eternity ago. Now people saying going to major corporations and then sitting down with me and they're like, okay, what are you doing? I tell them all these things. Then I'd say we're doing a podcast and they were just crickets. Like, what the F is a podcast? And so you have to explain it. And I'd say, you guys get radio, right? And so that's why the name became the Options Insider Radio Network. It has stuck ever since. But now you say a podcast, people are like, oh, yeah, I get it. Joe Rogan, all Spotify, all those things. Sure. But yeah, back then, not so much. So I tip my hat to all of you hardcore folks who have been in there since the old RSS days. You folks are the reason we are still doing it 15 plus years later. Let's see what the market's doing today. And I think you guys can probably guess it's really a whole heck of a lot of nothing. VIX seems like it's kind of just waking up and struggling to get out of bed today. 205,000 contracts as of a few minutes ago on the tape. The ADV going the wrong way, back below 500,000 contracts, 492,000 contracts on the tape. SPY actually looking a little bit more robust. I think it's that intraday switcheroo when we go from green down to red, even though it wasn't that dynamic. That was enough to drive some paper. That usually seems like that's the case with SPY because we're closing on a 4 million contracts off 3.95 million contracts. The ADV is 7, so we're already over half of your ADV's worth of paper out there today, which is clearly not the case with VIX. So SPY, VIX, they have a little bit different triggers out there when it comes to volume. The S looking pretty similar, about 1.1 million. That's a pretty active day for the S, all things considered. The ADV is 2.2, so we're pretty much halfway there in the S as well. Small caps, nobody wants to touch them today. We were just talking about the recon. It's interesting, I guess, after the rebalance, folks taking a bit of a breather out there. It's up about 0.2% out there in small cap land, but only 323,000 contracts on the tape. The ADV a little bit shy of 800K out there. And the Qs, 1.3 million. The ADV, almost 2.6 million. So we're pretty much halfway there as well. The Qs doesn't take much to have them move 0.5% in either direction. So the Qs are usually putting up some numbers these days. Let's see what's going on in the single name land. And you know what? Not a heck of a lot there either. This is like, if I had just seen these numbers out of context and you asked me to guess a day, I would say, okay, it's August 25th or maybe December 22nd or something like that, because not a heck of a lot going up on the old tape today. It only cost you 128,000 contracts to break into the top 10 today, listeners. That is about as low as I've seen it in quite some time out there. Usually, on any decent day, you can usually at least get to $1.50, $1.55, something like that. Maybe $1.80 if you're lucky. $1.28, that's pretty light. But it does get us to one of our frequent offenders, which is Charge Point Holdings. You know, Mark, I'm curious for you on this. You do all your big money flow over there. I was kind of joking on a recent episode of Options Oddities that we could almost do an entire show on just the amount of ridiculous, sizable flow. 50,000 of this, 30,000 of this, every single day. There are ridiculous prints in Charge Point. I'm curious if this name has come across your radar and your big money flow and what you think about all the crazy back and forth out there.
Yeah, it's incredible the amount of paper this sees going both ways. We watched one customer basically ride puts from like 25 all the way down to about 13. And that now that trader's been kind of trading around it. And then on the other end, we've got a couple of customers that like to be long calls. Today, they bought 35,000 of the July 1st 17 calls. Charge Point is 15.5. They're looking for a pretty big move. Might be a 1x2. Yep, it is. It is some sort of ratio. They are doing some sort of July 8th 16, July 1 16 versus the regular 17 kind of weird call fly trade. We've seen just an amazing amount of paper in this thing, and it's going both ways. Obviously the put buyers have been right, and they have continued to press. But we still have call buyers in there that are banking on this thing moving higher, and it's been one that has been just continuously active. The other one that I think we'll probably talk about at some point is MSOS, which is the cannabis ETF. That sees an amazing amount of paper for how obscure it is, and continues to see paper moving both ways.
Yeah, this Charge Point is just ridiculous. I mean, today, nothing's happening. It costs you 128,000 contracts to break into the top 10, and Charge Point still manages to put up a 35,000 lot of the weeklies in the 17 calls expiring on the 1st. I mean, this name is ridiculous. It's like two diametrically opposed funds or perhaps more are just slugging it out in there pretty much every day and for size. This is like Tesla size paper, but in a name that is obviously orders of magnitude smaller. It's just crazy. But yeah, Charge Point, another day that ends in Y, another random 35,000 lot going up. Yeah, I don't know what funds have discovered this and what they're up to out there. Obviously, there's a lot of put trades. We did see that. But yeah, these are calls trading today. So crazy town afoot out there. We could do a whole separate show, I think, on the network of Charge Point craziness. Instead, we'll just move on to number 9 for today. Maybe we'll come back to it on oddities. Again, we could spend the full hour out there. By the way, we had Saad Hussein. He was going to join us for oddities on Friday. He was all excited. We had the Flow Master queued up for vol views on Friday. A lot of good stuff. We'll try to get all those folks rescheduled for you, bring you back a lot of fun stuff here. Number 9, Baba. Is everything better again in China, or are we just kind of preparing for the next leg downward? Either way, Baba, $1.52, up about 1% today, trading 118 3/4. Number 8, you don't need me to explain why this one's moving. It's NEO. Just any day that ends in Y these days. NEO's usually around number 8. It's kind of like its spot. 201,000 contracts for NEO. Number 7, a name that just rolls off the tongue, Meta Platforms Inc. I wish I could see how much they paid the branding agency that they consulted with to come up with this name that I think is universally reviled. Obviously, Facebook kind of universally reviled as well, so maybe there's a little bit of overlap there, but in general, I can't yet to come across anyone who likes the name Meta. Number 7 today, 222,000 contracts, off about a third of a point, a little bit shy of the 170 handle out there. Number 6, it's NVIDIA, 232. Number 5 and number 4, old school symbol twins back in the rear view today. We've got AMD. I did it myself. AMD, number 5, 245,000 contracts. AMD getting bumped from its usual number 4 spot. AMC, by the way, almost literally unched it today around $87, and that's not an underlying day. By number 4, by its symbol twin and now rival, AMC, 334,000 contracts out there, trading about $14 or $1.60 or nearly 13% jump again today. So I guess the apes are back at it out there today. And your favorite movie theater chain / freaking gold miner. We had a great write-up about their CEO recently and what a controversial figure he has become out there. Number 3, it's Amazon. Yeah, say what you will about your underlying view on the underlying or everything else like that, but stock splits certainly do have an impact on volume. And in the case of the Amazonians, that is pretty clear. Amazon, number 3 again. Ever since they've split, it's been number 1, number 2, or number 3 pretty much every session. Amazon number 3 today, 472,000 contracts, off about 2%, right around 114 is where it's trading right now. The fruit company coming in at number 2, no love for the iPads and the iPhones today, even though they are up about 2/3 of a percent, but not enough no love from a volume perspective. Only 601,000 contracts on the tape. That means, as number 1, it's Tesla. 623,000. I mean, this is like half of what we would see in any sort of decently active day around this time. So again, kind of just an extremely light day. Tesla off a whopping $3 or about 0.4% out there after having an intraday range of as low as 730, which was just looks like about a little while ago, and a high of 756. So it's had a $26 range today, but right now hanging out kind of unched like the markets are. Not much lighting it up out there. There are still, listeners, if you are an earnings fan, then there are still some names for you guys to sink your teeth into. We have Nike today, as well as Bed Bath & Beyond. I do believe we had Nike. No, Nike is after the bell today. I thought they were before the bell. They're after the bell. We have Nike after the bell today. Wednesday, Bed Bath & Beyond, General Mills. We have Walgreens on Thursday. Oh, excuse me. Still called the Walgreens Boots Alliance, I think, until that alliance breaks up. And Micron. Let's go out some of the move results reports. Those looks like nothing popping off before the bell. It's all after the bell today. Again, hot off the presses from our friends over there at Orats. Matt will be joining me tomorrow, I believe, for a pretty dense day of content for you folks. Advisors Option. He has been hitting me up on the network for the last week saying he thinks he called the bottom about 100 odd points ago. He's been saying this is the bottom, this is the bottom. He likes to do that stuff. So we'll get more insight into him and why he's so confident at these levels, or at least he was about 100 odd points ago. Tomorrow on the Advisors Option. All right, now Nike after the bell today, trading almost 113 as of the time of this report. They were pricing in $8.20. In the past, they've moved $6.62. I know some people have been written in saying, why don't you do percent? Why do you do dollars? I think people have an easier time wrapping their heads around dollars, even though all the calculations are done in percent behind the scenes, listeners, so don't worry. And then we have Walgreens Boots Alliance, 30th before the bell. 41.65 is where they are trading as of this report. They're pricing in $2.30. Actually, no, excuse me, $2.10. And in the past, they've moved $2.14. So they're pretty much right in line with what they're expecting. You know what else was kind of below line, really, was the earnings season, 83%. The average has been 88% for a while out here. Earnings trades report, we're still got 92 long straddles that we're monitoring for your learning and trading pleasure. We have 42 short straddles and 95 long calendars. So it's like no new entries or exits on the trades out here today. All right, that means it's time to keep on rolling. See what our Eye of Sauron has found today. It is time. Diablo.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
everybody. Welcome to the Odd Block, the portion of the show where we get weird, we get wild, perhaps we even get whimsical. Let's kick things off here. Going back to a name that if you listen to Options Oddities, one of our pro members, you'll know we talked about recently. Coming back to it again, this is FSKKR Capital Corp. Remember the old KKR from Barbarians of the Gates and all those good days back in the 80s. This is FSKKR now. Ticker symbol FSK. Trading right now $19.59, up about 31 cents today. On the year, let's see, a year ago it was trading $21.50, and it got as high as $23.44. That was on September 13th. Then it sold off down to what had been its low for the year of 1992 on December 20th. Then it rallied all the way back up again to $23.30. So it likes that $23.30, $23.40 level. Got there a couple of times. That was back in March. Hung out there for a while until April 20th. And then it just kind of sold off again down to $20 exactly on May 9th. Bounced hard off that a few times until everyone's favorite day. Oh, actually, it's June 7th, not June 8th. It peaked recently on June 7th and then sold off hard to $18.08. That was the low on the 16th. And ever since then, it has been rallying again back up to where we find it right now. $19.59. So kind of a turbulent year here for KKR, but they're hanging out off their lows for the year, which is about $18, but still pretty far away from their highs of around $23.50. And what we found out here today were some puts, in particular the AUG 17 half puts going up for 43 cents, 9,699 times. Looks like paper was pretty much lifting the offer on these. That is a 42 vol. If you are intrigued, listeners, the stock was a little bit lower, 1936, when this print went up. And there are earnings. They are on August 8th, so that will come before options expiration, obviously. So they are getting themselves a little bit of earnings protection. This is not the first time we have seen some put love out here. We talked about someone scooping up some puts in FSK, doing about almost 15,000. This was back on Options Oddities on May 20th. There were the July 20 puts. Paper buying those for 80 cents, nearly 15,000 times. So it looks like the stock at the time was $21.32. So given the fact that they're $19.50 and they got down to 18, they were on the right side of that. Whether they got out in time, which you'll have to check on Options Oddities to see how they worked out, listeners. But Mr. Meatball, is this a name that has come across your big money flow, this FSK, a.k.a. the new incarnation of KKR? And what do you think about somebody scooping up some puts here through earnings in August, sir?
Yep, this is one that we've seen a lot of, and there's been a ton of activity, and traders have been buying puts in August and in July. We saw paper last week. We saw paper this week. You're right, they've got earnings coming up. But this is also interest rate sensitive, so it makes you wonder whether this little rally in bonds is coming to an end, and we could see some trouble for FSK in the coming weeks.
Whenever I see this ticker, I can't help but think of the old Barbarians of the Gates. Great book, great movie. The takeover craze back in the 80s. Good stuff out there. I think Jonathan Price, didn't he play the KKR guy in that movie? All right, let's keep on rolling. Let's go on out to Revolve Group Inc. Haven't talked about this one in a while. Ticker symbol Revolve, easier for me to say. RVLV. Let's see, trading right now 29.25 off. Let's see, what's off on the year? Let's see, on today they're off about 80 cents or about 2.6%. On the year, they've had a bit of a rough year. A year ago, they were trading $70, pretty much exactly. So yeah, they've come under some pressure, shall we say. And they hung out in that 70, let's say 60 to 70 range for the better part of the year until October. And they started rallying. Looks like they hit their high for the year on almost $90, $89.60 on November 18th. So very much along the lines of the broad equity market. And then they started selling off. They got down to $45 even. So they got cut almost in half by January 24th. That's a pretty quick comeuppance. November 18th, they were at almost $90. By January 4th, which should be January 21st, they were at 41. So, yeah, that's quite an aggressive sell-off. And they tried to rally a bit. February 15th got up to $61 again. So they got $20 back. And then they gave it back up by March 7th. They were back to $40 again. Tried rallying again. April got up to $55. And then they gave up the ghost, sold off to their low of $24.10 on May 24th. And they have actually rallied a little bit since then. Obviously, it looks like about $5 or so from the lows ever since May 24th. So that's where we find Revolve Group. What did our Eye of Sauron find today? It was the July 22 half puts going up for 21 cents. So these are a little bit better than the bid. Market pretty wide, 15 at 35. But again, it's Revolve Group. They're coming for size. Not that surprising. 8,547 went up for 21 cents. The stock was actually about half a buck higher, 29.73 when these went up. And the earnings are in August, so there's not going to have any earnings juice on these puts. So Mr. Meatball, someone coming in, I won't say drawing an aggressive line in the sand because it's pretty much $7 below where the stock was at the time that they sold these. They got 21 cents for it, which is not a ton, but it's not nothing given how far out of the money they are. And also, when it comes to danger, at least from a near-term chart perspective, this thing only got down to about $24. So they're not exactly drawing an aggressive line in the sand. What do you think, though, about this Revolve Group put sale here for 21 cents at 22 half, sir?
Pretty nice, pretty decent sized sale, and makes some sense. This is a name that has gone up to 60, and then now is getting kind of hit in the face. But if retail can turn around, it could pay out pretty nicely. So I'm going to be very interested to see where this one ends up.
Yeah, I don't hate these either. I mean, the level you can't hate. So whether you're bullish on Revolve Group or not, that's up to you. But I don't hate these levels compared to a lot of the puts we've seen. These are certainly not getting a ton of juice for them. But hey, it's a decent level on the stock if you are so inclined for such things. Let's go on out now to our final name of the day here. This is a good ticker. Wow. This is Wide Open West Inc. They are a subsidiary of Race Car Acquisition LLC. So that explains everything you need to know about this name. Trading right now, $17.50, up about a quarter or 1.3% today. On the year, let's see, a year ago, they were trading not that far from where they are right now. They were trading $18.18. And then they shot up for the first time up to, looks like their high for the year of about $23.92, so almost $24. Then they gave it all back, got down to $19.73 a couple of sessions later. Then they kind of bounced around in this mid to low, high teens to low 20s range pretty much until the end of the year. December 9th, they rallied from $18.44. By the 29th, they were trading $21.48, so they rallied a nice $3. They hung out there briefly, sold back off in January. About a month later, January 20th, back down to $18 again. Then they sold off even harder on March 7th. They got down to, looks like about $16.71. Then they shot back up on April 20th, back up $22.68. And then right back, it's like a biotech stock. Right back down on May 12th, $17.75. And then right back up again, $22.50 on May 27th. And then gave it right back down again. So if you were range trading this thing over the last couple of months, you've done pretty well. This thing has moved 2 or 3 handles at a clip multiple times over the past few months. And then shot right back down to its low for the year of $15.96. That was on June 16th. And now they are obviously in the midst of a little bit of a rally up to $17.50. Where we find them today. And let's see, what do we find out here today? Looks like somebody thinks this thing might have a little bit more upside to go. And given the fact this thing has been whipsawing all over the place lately, maybe you can understand some of that sentiment. 4,000 of the AUG 17 halves went up today for $1.60. It's a pretty wide market, but looks like they probably bought these. These were $1.30 at $1.75. That's about a 69 vol if you are curious. The stock was a little bit lower, $17.34 when they scooped these up. Earnings are on August 8th, so if they do hold these through expiration, they will get a little bit of an earnings pop on the 8th as well. So Mr. Rock Lobster, this name, this subsidiary of Race Car Acquisition LLC, has been whipping around quite a bit. So it looks like maybe somebody is betting on another whipsaw to the upside in the near term here in Wide Open West Inc.
One, I'm not Mr. Rock Lobster. 2,
I apologize. I have been getting stuck full of needles for the last few days.
Because my in-laws have a WOW subscription. It's a cable company. They do cable and internet and things like that compete with other local cable companies like your Comcast of the world. They are kind of the cheap alternative to those names. It's an interesting one. When you look at cable as a whole, you gotta wonder. But heck, maybe the wide open West is gonna get closed and bought because this sucker got absolutely smoked a couple of weeks ago, and they appear to be setting up and maybe looking for a move back to the 200-day moving average, which would be right around 1960. So these definitely appear to be bullish and play for Wide Open West Incorporated, WOW, to make a run higher.
Yeah, you're right. They're a cable provider here. I'm looking here. I don't know what race car acquisition does. It's a weird. I thought they were buying up race cars, but apparently they buy up cable and internet providers because they are the parent company of Wide Open West. So strange names aplenty here for WOW. What do you think of these calls, listeners? You like them? Hit us up. Let us know. I know you guys always like, though, the strategy block. So let's get to it.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, we have reached that portion of the show, the time where I unleash Uncle Mike upon the unwashed masses. Uncle Mike, sir, what do you have in store for the unwashed? Actually, our audience is pretty clean. Let's call them the washed masses this week, sir.
Well, I want to go through today is a call spread. And so let's say you're in this market and you've seen this rally that we've had over the course of the last week, whatever. And maybe you want to sell a little bit of premium to add something on top of your bullish butterflies, bullish call spreads, or whatever the case may be, or bullish calls. What if you want to do just a good old-fashioned call spread? Well, let's talk about that today. So one thing with which you can do if you are bearish neutral is you can sell a call option. Now, I'm not talking about a covered call. Let's just start with a good old-fashioned naked call right now. I know this is a family show, but let's talk about being naked right now. And if you sell a naked call option, so long as the price of the underlying stays below the strike price with which you sold the naked call option, you will make money if you hold it till expiration. And so it's just that easy. Unfortunately, if the stock goes above your short strike price, then you're on the hook for unlimited risk. And so that's kind of a problem. Now, you don't really want to buy the stock per se because you have enough bullish deltas or you're just straight up bearish, whatever the case may be. So what can you do? Well, what you can do is you can sell a vertical short call spread. So let's say that XYZ stock is trading at $45 per share, and you don't really see it going up to the 50 level, so you sell the 50 call. But as you're doing that, you realize, oh, I do not want to be naked because if for some reason I'm wrong on this and this stock goes up to 80, I really do not have that peaceful, easy feeling that I want from listening to the Eagles, and naked calls take away the peaceful, easy feeling. So what I'm going to do is I'm going to sell the 50 call and simultaneously buy the 55 call. And by doing that, I will have a net credit, usually around maybe $1, getting $1 in credit, and your risk is $4 because it's the distance between the strike prices with which your risk is. Now, you may or may not get $1. You might get 10 cents. You might get $2. Who knows? It just depends on how short-term or long-term you want to go and the underlying with which you're using. So why would I do something like that? Well, if I'm looking at the stock and I believe it's going to stay below a certain level, then that's something with which to consider. I get all the income of the short call. However, some of the income is spent on hedging it. And that money that's spent on hedging it is the money that's spent on buying the long call. And so by doing this, it has the same technique of selling a short call. However, your risk is limited. So that way, you know that if the stock for some reason does goes up to 60, 70, 80, 90, whatever the case may be, you know that you're protected from 55 on up. You know that you're going to only lose a specific amount. And that's the benefit of vertical spreads. Now, when doing this, have the understanding that you don't get all your money right away. So in other words, if the stock goes lower, yes, you'll make money on the long call, but you're also going to lose money on the short. You're going to make money on the short call, but you're also going to lose money on the long call. So, for example, if God were to tell me, Mike, this stock is staying below 50, what I would do is I would just sell the 50 call naked. Why do I need to have the 55 call in place to hedge myself? God told me it's not going above 50. Now, unfortunately, in reality, God does not tell me which way stocks are going to go. But my point is that I don't need that hedge if I know that it's not going to go up. God doesn't tell people where stocks are going to go. I don't care what the late night infomercials may say. So on there, what I like to do is buy some type of a protection. And what that is buying the long call to protect the short call. Still the same effect. You won't make as much money as you would on just selling a naked call, but the protection that you have makes a lot more sense, in my opinion. So if you believe that we've had a little bit of a rally recently and you're looking to maybe trim some of your deltas and maybe get some theta on the table in some way, shape, or form, whatever your positions may be, if that's what you're thinking, a short call spread might be something with which to consider. And that's the strategy block for today.
All right, let's keep on rolling. It's time to hit up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. I think we're falling behind on some of our mail. It's been busy times here on the show, as you might imagine. So get some of that. Let's pay off our question of the week that I mentioned at the top of the show from last week. Still mulling over what our question of the week should be for this week. So if you folks have suggestions, if you're listening live, hit us up. If you're listening after the fact, send them in if you have a poll question you'd like us to ask this week. So we've touched on a lot of interesting topics of late, but there's a lot going on out there that might be interesting or top of mind to you folks. So hit us up, let us know if you have an idea. In terms of last week, we asked you guys, hey, back to our BTFD discussion that is kind of top of mind for everybody right now. We said over 40% of our audience, when we polled you guys saying, are you long right now, or were you looking to buy, or were you BTFDing? Over 40% of you said you were BTFDing, or I should say really waiting to BTFD until the SPX hit 37.50 or below. Obviously, we hit that level and below recently. So we asked you last week, are you back in? What's your deal? And we gave you three choices: waiting for lower levels, I'm back in, or I never got out. And 54.2%, so over half of you saying you are waiting for lower levels out there. 25.4%, this part dismays me a little bit. 25.4% of you saying you never got out, so you've been kind of riding this elevator right back down, which that's kind of one of the reasons the network exists, right? We want to make you guys a little bit more active so you don't have to. You can ride the elevator up all you want. You don't want to ride it down. And then I'm back in is 20.3%. So 20% of you buying back in, over half are waiting, and about a quarter of you are still in by default because you never got out. So intriguing stuff. Mr. Uncle Mike, maybe we'll start with you. What are your thoughts on the fact that over half of our audience is still waiting for lower levels, and 25% never got out? Maybe they need to have a call with Uncle Mike. And what do you think our next question of the week should be? A three-parter, a trifecta for you, sir.
Well, in terms of those that never got out, I guess I'm kind of in that camp because I just keep rolling down my put spreads. That could be the case to where you're not necessarily out, but you're not really totally in. So I'm hoping for a lot of our audience that they're kind of in that camp. In terms of people waiting for lower levels, I mean, we dropped a pretty significant amount. I believe we were down 26% off the high at one point. When we were at 36.36, I think 48.08, something like that was the high. That's a pretty big drop. And so I appreciate that patience is a good thing, but I think that you've had your drop. Now, if you are like me and that I'd feel more comfortable being in a market that's positive on the year, I obviously respect that. That's kind of what I feel. But that's it's those are interesting numbers with the poll. That's one of the more interesting polls that I think we've had on this show in terms of the results. And in terms of the question of the week for next week, I would say maybe ask it towards the people who are waiting for lower levels. Is it worth being bearish right now if you're waiting for lower levels?
Getting short, stepping in front of that train, riding it all the way back down, driving it back down, some might say, if you believe all the Twitter conspiracies that are going. I see Citadel was trending again this morning, so that's usually never a good sign. The market's in a bit of a tizzy out there. Mr. Meatball, same question for you, sir. What do you think about over half of our audience? They're hanging out, waiting for lower levels. About a quarter never got out. 20% are back in pretty much, or were back in as of the levels from last week. And then B, what do you think our question of the week should be coming up?
All right. So you never got out. That was a mistake. You're not in yet. I don't blame you. You got in at 37.50. I think that's a level at least to start pecking. That's kind of a nice level of resistance here for the S&P near term. Do I think we're going to get to pre-pandemic levels? Yeah, I do. But do I blame you for stepping in and buying a little around 37.50? No. And it's paid off kind of nicely. Now, we'll see where today takes us. We're currently down 11. Are we going to pin 3,900? Entirely possible. But our question of the week, what should it be? Maybe it needs to be something around, because we didn't talk about this today, but I don't know if you've seen where Bitcoin is or ETH, but they are getting to levels that are just catastrophic for that group. And I'm wondering about that. Or do we ask a question about the next level for the VIX? Is it going to 20 or is it going to 35 or is it going to both before its expiration?
Well, we did the 10K or 50K question a couple of weeks ago for Bitcoin, and most of our audience was on the 10K tip. So, yeah, they're looking all right. By the way, we have Crypto Rundown coming up a little bit later today, listeners, so we will get a deeper dive into all this. And yes, all these cryptos that maybe you didn't like them at levels a few months ago. Well, spoiler alert, they're a lot lower now, so perhaps those are attractive to you now. VIX, we have done some VIX polls. We have done some S&P polls as well, so we'll mix it up. If you guys have a suggestion for question of the week, a topic you think we should peer into our audience and try to get the answers for, hit us up. Let us know. Just like this guy's handle, GSP3. So I guess he's the George St. Pierre III. I don't know. He says, markets are tanking. What do I do now? I think this came in a week and change ago. So again, we've been kind of backed up here. GSP3, Mr. Uncle Mike, this sounds like a question for the uncleist of Mikes, because you are a resident diehard bull. Let's pretend GSP3 is a client. He calls you up. He's like, Uncle Mike, markets are tanking. What do I do now, sir?
Well, I would say, Mr. GSP, for your long-term holdings, I would say do nothing, because long-term buy and hold means long-term buy and hold. In the short term, you likely, if you are a client, you likely have some type of hedged equity, and then let the hedge do its job. And then in terms of the aggressive strategy, I'll roll down the put spread. And if we are close enough to it, or whatever the case may be, and we'll work with it that way. And so I would say just stay calm, stay your course. And that 100% of the time when the markets have pulled back, they've come back and made new highs in the 100-year history. So there's only one time that hasn't happened yet, and that time is right now. And so we'll see if the 100-year history can hold true in 2022. Might not happen this year, might not happen next year, but I do believe it will happen. But we have a long track record of it coming back.
Let's see. Let's squeeze another one here. Let's go to Brian. He also sent this in, I think, last week. Obviously, markets have whipped around a little bit since you sent this in, Brian. He says, hello. I've got some cash on the sidelines, and I'm looking at selling some SPY puts at around the 340 level. The problem is that the premium that far out is pretty low, that far out of the money. I should say, is pretty low. I know Mark prefers near-term premium sales to remain flexible. Yes, I do. So I'm debating whether it's worth doing much farther out, I'm assuming he means in time, to lock in an actually decent amount of premium. How far out would you reasonably sell puts? Easy for me to say. I can't read today. How far out would you reasonably sell puts in SPY? Am I crazy to think about a 6-month puts right now? Well, interesting stuff. I think when your question came in, which was last week, I think our producers crunched some numbers for you here. So at the time, I think you're looking at in a couple of weeks. So we did the July 1st weekly, which is obviously a little bit closer now, going out sooner than when your question came in. But at the time, you said the 340 level, you could get a $177 for that 340 puts. So not nothing. It's not. I mean, it's obviously $177 per contract out there. So if you go out to buy 100 shares of SPY at that level, you got to shell out some cash. So be prepared for that. But if you are comfortable with buying it, $177, you got an extra week. You got an extra up to $2.10 actually for that July 5th weekly put. And then you got another, looks like another 10 days or so, because obviously there's many expirations in SPY, which is the 15th there. $3.50. Now you're getting a little bit more juice. Now you're saying you want to go farther out. You want to go all the way out to, let's say, September. Now you're getting nearly $10, $9.85 out there. So obviously a lot more. Again, if you're comfortable at that level and you're comfortable going out, and again, you're locking up that capital. We talked about it on the advisor's option. We talked about it on this show on Options Bootcamp. There is an opportunity cost to doing this trade. You have to set aside that amount of capital to buy however many contracts you're going to do. You didn't say how much size you're looking to do here. So just bear that in mind. This is not a free lunch, not just getting $9.85 and then you could trade it up with the rest of your capital. That capital is tied up. If that's worth it to you and you like that level in the S&P, then I won't be one here to dissuade you. Mr. Meatball, what do you have to say for someone who's coming in to you and says, I want to buy the S&P at some lower levels. I want to sell puts to do it, which is, of course, a method that we advocate here. But he's a little bit concerned about not getting enough juice, but he's also concerned about going out too far. How do you draw that line, sir?
Well, I mean, you can get some pretty nice juice going out to January. And, that is 6 months away. That's a nice duration. You're going to get some good premium. If you're selling puts with VIX at 27, then, you've got to be willing to take you want to be selling some Vega. And, there's some real nice juice. The 3,000 puts are going to pay you 2%. The 3,500 puts, which are a good 10% out of the money, are going to bring in about 4%. Those are nice premium sales, and I will take delivery at those levels. So, I think that there's plenty of reason to be willing to short puts at down here if you're willing to buy at certain levels. And I don't think you need to worry about. I don't think you really need to worry about going too far out. Vol's pretty high. Obviously, you'd like it a little higher than it currently is, but you're getting some nice Vega if you go out and sell. And when Vol's high, that's what you want to sell. You want to sell some juice, and that's Vega.
Yeah, when you're talking the S&P, I forgot who wrote this in. This is Brian. When you're talking the S&P, obviously it's not the same thing as your weekly options and your typical single name equity. You need a little bit more time for these things to bake out there. So you don't have to be out there hanging out in the weeklies all the time. You can go a little bit farther out in some of your broad equity indices. I like to keep my stuff nearer to home for more of the kind of your traditional premium harvesting. This is, you're drawing a line in the S&P, so you can go a little bit farther out. And as we said, vol is high, so not the worst time to do so if you were so inclined. Hit us up with some size and what levels you end up doing here, Brian, because we always like to hear feedback from our folks as we keep on rolling. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's do it. Let's go around the block, see what everyone's paying attention to. Uncle Mike, we will start with you, sir. What do you have on the radar until our Thursday show?
I'm watching the 3,900 level of the S&P and also just watching the news. I know we don't get political on this show, and I'm not about to do that, but there was a landmark decision in the Supreme Court last week that we all know about, just seeing if that has any effect on the markets at all. So far, it doesn't appear that it has. And if there is anything that could cause some type of civil unrest in this country, that decision is something that could, because there's a lot of people that are upset about it and a lot of people that are happy about it. So just watching to see if that does appear to have any effect on things as the days go by.
Just what we needed, a little more civil unrest in the country. That's exactly what the doctor ordered. Mr. Meatball, same question for you, sir. What are you keeping an eye on until our Thursday episode?
Yeah, with Mike on this 3,900 level, watching vol and VIX. Vol continues to kind of die by the vine here. I'm keeping a tight eye on UVXY and where that goes. And then I'm watching these tech names. Apple, nice move back to 145 or 143 before starting to give it away. If we're really going to get to some of the levels that I've talked about, this is a stock that could get near 100. So I'm keeping a tight eye there. And then the oil names. What are they going to do? They're about the only positive thing really holding the market up today is energy names. So I'm keeping an eye on Exxon and Marathon and where they go.
And that music means we got to go on out of here. Don't worry, we'll be back in a little bit with the crypto rundown. If you're listening live, that'll be in your ear holes post haste. If you're on demand, just wait until it hits the network. Hit next. It'll be ready and waiting for you. No, it's always ready and waiting to talk to you. It's the Uncle-list of Mike's. Mr. Uncle Mike, sir, if folks want to hit you up, where should they go? What should they do?
stcharleswealth.com. Check out my website. Check out my YouTube channel. Type in St. Charles Wealth Management. I will have a video on call spreads up shortly to expand on today. Or follow me on Twitter at Mike TOSAW, TOSAW.
There you go. Give him a follow on the old Twitters at Mike TOSAW. Check him out on YouTube. He's one of the rising YouTube stars of 2022. Check him out over there. Mr. Meatball's been cranking away on many platforms for a while, including some new products. Mr. Meatball, they head on over to Option Pit. What will they find, sir?
Yeah, we're writing awesome content every day, from crypto to bonds and macro to you name it. Go to optionpit.com. I write a blog on volatility and VIX every day. Today I was talking about the fact that vol is about as cheap as it's going to come and ways that you could set up a trade around it.
There you go. Check them out, optionpit.com. We'll be back with these yokels later on in this week on Thursday. Of course, later today we'll be back with the crypto rundown. Tomorrow, going to get a double dose of a pro Q&A as well as the advisor's options. We'll get a sense of what the Oracle of New Hampshire is putting down here. He likes the market at these. He liked them at lower levels. We'll see what he feels about these levels and a whole bunch more tomorrow. Wednesday, you're going to get your boot camp, as well as I do believe we are dragging Mr. Overby back live onto the network to do a live huddle. So if you have any questions for him, get those ready for the Wednesday show. Then back again on Thursday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.